I wanted to discuss 401k plans. These are the venerable darling of the investment world. They've been regarded as solid investment vehicles for retirement. They've pretty much are becoming the only choice for workers these days to save for retirement, or so it may seem. That's the way it's being marketed. Most people are unaware of what they're getting involved with the 401k, unfortunately. I actually conducted interviews on the street very recently for a video I just released on YouTube. It's available on my website and also on my YouTube channel. There's a screenshot from it, and I just wanted to find everyday people and find out their perspectives about their plans. For the most part, and you can watch the video, a lot of them want the best. They're really looking for something that will lead them to retirement and give them financial security. But the 401k, unfortunately, I'll ask, do you invest in the 401k? Oh yeah, definitely. Why is that? Well, to save for retirement. Okay, do you feel that the 401k will provide you with adequate funds for retirement? No. Okay. And that was quite shocking to me. I mean, people go into a new job and they automatically enroll in the plan, which is fine. But it's not providing adequate savings, and it's really becoming more of an issue now because the market is a different beast than it was a few years ago. It's much more volatile. We have derivatives, we have leverage, we have automated trading, so on and so forth. And the issue is that the closer you get to retirement, the more dangerous it is, because your entire savings is exposed to the market. Let's say, if you lose 40% right before you retire, that can be absolutely devastating. And in this article in MSN Money, the father of the 401k disowns it. Okay, it says here, Ted Benna, who 3 decades ago seized an IRS loophole to transform American retirement savings, says he's proud to be the father of the 401k. He also thinks he created a monster. The plans, which he intended to be as simple for employees as pensions, now offer too many investment options and too many opportunities to make mistakes, he says. I would blow up the system and restart with something totally different. Blowing up the existing structures is the only way we can simplify them. He says, the original 401k plans could be explained to employees in just a minute. Benna, now 69 and semi-retired himself, he says there were only 2 options, a guaranteed fund and an equity fund. With the guaranteed investment fund, we tell them that this is what you'll have when you retire. With the equity fund, which was usually something like Fidelity Magellan Fund, we'd say you might have more, you might have less, so most people split their contributions 50-50 between the guaranteed and the equity fund. So they wanted some market exposure, but they also wanted an element of a guarantee. So it says now this monster is out of control. We went to 3 options, then to 6, then to 7, then to 15. It is far beyond what most participants are able to deal with. And I'm not convinced we have added value by getting more complicated. And funny enough, he blames newfound complexity on what he says was a small percentage of employees who wanted it. What triggered this whole mess is that some of the more sophisticated participants were a pain in the butt. You'd have these troublemaker loudmouths push human resources and say, why don't we have this flavor of the month fund? These sophisticated employees are also the ones taking advantage of the education and advice being offered. I don't know if I would demonize these quote-unquote sophisticated employees, because wanting investment options to be plentiful isn't really something that I would be against. However, he finds that these people basically ruined it for everyone else. I disagree. I think that the whole thing with the 401k is that, sure, there seems to be a tax benefit. In the beginning, when you put your money in, of course, it's tax deferred, and that's the first thing people mention. And I'll say, well, you pay tax anyway. They said, sure, but you pay at a later date. And then somebody will mention time value of money. Now, the thing is, time value of money, which means that money paid tomorrow is better than money paid today, it only works if you have an alternative. Okay, if your money's locked in the 401k and you can't really do anything with it except invest in that 401k, then time value of money is really irrelevant. And people will say, well, hold on a second, your compounding returns are based on pre-tax dollars, which is great. But the fact is that over time, you're just going to be taxed on a higher amount at the end. But let's say that the effective tax rate does decrease for people in retirement, which is something that everybody mentions. They say, well, my effective tax rate will be lower, so I'll pay less in taxes. All right, well, let's take a look at that. Let's say for a 45-year-old individual, the effective tax rate is 35%. Now let's say that for the same individual, the effective tax rate at 65 decreases to 15%. So before it was 35, now it's 15 over 20 years. This represents a 1% return over those 20 years, annual, when you consider only taxes. So the thing to consider is you're being given 1% to lock up your money per year. Now, when you factor in A, the fees that are charged by the 401k, B, the high fees that are charged by the funds available within that 401k, and you also remember that the money is illiquid because you have to pay a 10% penalty to access it, barring some specific hardships or situations like that. Your money's locked up, and you would have to pay 10% to access it before a certain age. The benefits really don't seem as stellar. Also, the fact that the investment choices are limited is also another factor which makes 401ks not as attractive as they can be. Many of these investment options, they're there because the mutual fund company simply paid for them to be there. Not necessarily because they're the best investment options out there, or they are the least expensive in terms of fees, or they have had the highest performance, or anything like that. And many investors are surprised to learn this. They thought that they're getting a basket of the best investments out there, so they might have a chance to actually make the 401k work for them. But it's not really the case. The 401k really wasn't designed to benefit employees as much as it was designed to benefit the investment industry. And the investment industry loves it. What's not to love? They have people locked up for 40, 30, 20 years at a time. They can offer mutual funds that are affiliated with them somehow, so they're making money twice. They're making money by administering the 401k. They're also making money through management of the fund, which can have higher fees than other funds. Basically, anything goes. The employer is also benefiting because of something that's called revenue sharing. So they'll partake in some of the income that these investment companies are receiving. So employers are also benefiting, let's not forget, because offering a 401k is much cheaper than offering a pension. And whereas before, a company would have to fund a pension liability for its employees for the rest of their life, now they just simply match a small percentage of a contribution you put in. People say, well, I have the match, so it's free money. I love this term, free money. It's really not free money. You have to remember that you're not accessing these funds, and it's basically a system built to work against you, not necessarily for you. So if anyone's interested, on my website in the knowledge section, you'll find a 3-part series where I go over the top 5 myths of your 401k. I cover a lot of the topics I just mentioned more in depth, and basically I outline why I feel the 401k is just not there in terms of being able to take people to retirement in a safe way. And the thing is, in many of these funds, if people are interested in saving money, they can simply invest in those specific funds or funds that are extremely close to those funds on their own. There's nothing really stopping them, and they can have a much wider range of investment options than simply the menu that's provided for them in their 401k. And that's basically a different take on what's been purported to be such a great option for people. It's really not. The father of the 401k has basically disowned it himself, and I think investors could do a lot better. Even if you have a retirement account that's self-directed, if you have an IRA, right there, that's even a better option than the 401k, because you have more control. The fees may be substantially lower, and you may actually get a portfolio that benefits you. But I think people should seriously take a look at these 401ks and decide how it's going to work for them and whether it is going to work for them at all. You'll find a lot of these financial calculators that people like to use to say, oh, this is what you'll have when you retire. And you have to plug in a return, an annual return that the program is going to assume for the life of the 401k. It doesn't work that way. It doesn't work that way. Employees aren't told this. They think they're going to retire with $1 million, and right when they're ready to go, the market tanks and they have to work a lot longer. So that's basically another factor why I'm not a big fan of 401ks. The mutual funds within the 401ks, if you really take a look at them, a lot of them are dogs. That's just the truth of it. They are not the best funds out there, and they are put there simply because they generate revenue for a particular investment company, but there are better choices out there. Some funds have been doing great, and they're not limited to being offered through a 401k plan. So, of course, everybody's situation is different, and it would be crazy for someone to simply withdraw money from their 401k without serious consideration because, like I said before, there is the 10% penalty, and also you will end up paying taxes on whatever you take out. But as far as the decision to put the funds in the first place, I think that's something investors should seriously consider going forward, and to avoid buying into the hype because there's plenty of it, and there's not really enough people telling it like it is. Actually, one of the people I interviewed during my video, he was a physician, and he said, you know, we provide 401ks for our employees, and I find out that most of them are losing more money than they're actually making. So right there, that's a first-person perspective that'll tell you that, you know, even employers in many ways, they're looking at these investment options and sort of shaking their head as to why they're providing them and why they're not benefiting their employees.